see. Um, Trying to get this thing going. All right. Okay. How is everybody doing? Welcome to Seven Band Financial Agency. I'm your cash flow consultant, Malik East, and I'm here to help you take control of your finances. Now, in today's episode, we're going to talk about how to beat the bank with dynamic banking. Okay? So, with dynamic banking, we're just going to start with the word dynamic and just break it down from there. So, dynamic is a process or a system characterized by constant change, activity, or progress. That's what characterizes how we use the banking system. We need our money to work for us constantly, not just sitting in a checkings account or a savings account, earning nothing and just benefiting the bank. So, dynamic banking is a process that maximizes your cash flow to eliminate debt, grow assets, and stockpile reserves. Now, with traditional banking, as you can see, any cash flow that you have, you can either put it towards debt or you can put it towards savings. If you put it towards savings, you're going to keep paying on the debts and you're going to end up paying the maximum in interest charges. Okay. If you decide to put all of your extra cash flow into savings, you're not doing yourself any favors at paying down your debts. Now, on the flip side, if you put all of your cash flow towards paying down debt, and if you come upon an unexpected emergency, you're not going to have access to money in order to stay afloat. So with dynamic banking, we get the best of both worlds. We save for our emergencies. We're paying down the debt. And I know you're probably thinking, okay, how does that work, right? Utilizing lines of credit. So with lines of credit, you're paying down a debt, but it's a revolving account. You still have access to all that line of credit that you paid down. So if you come across an emergency and you can't cover it with a credit card, you have to write a check, and you can do that out of your line of credit. Business owners and investors can use dynamic banking to rapidly improve their cash flow, emergency preparedness, debt to income ratios, total debt load, and interest costs. Okay. Now, how do we quote unquote beat the bank? All right. It's a 3-step process. As you see, first, you've got to optimize your credit profile. 2, we're going to leverage that credit to access capital by way of lines of credit. And 3, we're going to use what we call debt elimination banking tools to maximize your cash flow. So with dynamic banking, we flow all of your income, all the money you get in a month through the debt elimination banking tool. We don't want your cash to sit idle in a checkings account or savings account. Okay. Think of it as like the heart for your finances. Okay. It's like the heart that's pumping blood to every important part of your body. Right. So this pretty much works the same way. So here's what it looks like. Okay. Dynamic banking with a home equity line of credit. You've got your income. Okay. Normally it may go to a savings account or a checkings account, or it might go right to debt. We're not going to do that. We're going to put your income right into the home equity line of credit. And from there, we're going to deploy it into investments, emergency funds, vacations, life insurance policies, cash value life insurance policies, and retirement accounts, and your debt, of course. So we could do everything with a home equity line of credit, a HELOC, that we could with a checkings account. Okay, the same things. Now, let me go ahead and let me just talk about the debt elimination banking tools, and let's just see how those work. All right, because those are the keys to success with dynamic banking. So I want you guys to remember, first, we talked about optimizing your credit. If your credit isn't good, you may not have access to unsecured lines of credit, and that's okay. We can still make this work. You can get secured lines of credit. Okay, now credit cards, those they can be secured and unsecured. Ideally, we want them to be unsecured. So your consumer credit cards, let's say, if you start off with secured, we're going to improve your credit and ultimately get some unsecured, help you get some of that. Those usually offer the best rates and the best rewards. Secured personal lines of credit, same thing. You don't want to tie up your assets by plunging them into the bank. Okay, so we want to work towards getting unsecured personal lines of credit. All right, unless it's home equity line of credit. Now, home equity line of credit typically offers the lowest rates available. So, home equity line of credit is secure, is a secure one, but that's an okay secure line of credit. It tends to get the most. You tend to get the most access to the highest balances, and it can help you knock down debt really, really, really fast. Cash value life insurance can be used. It's not quite as liquid as lines of credit, but it has its purposes. It has its unique purposes and stuff like that. Cash value life insurance and retirement accounts, both of those can be used. They're just not revolving accounts. And like I said, we have used them in different ways. Okay, that's just something I just discussed in another video. All right, we have now if you have a business, you have access to business credit cards, business line of credit. If you have a choice between using business credit cards and business lines of credit and personal, go with the business. Okay, it doesn't show up on your credit reports. As long as your credit is okay and you're not trying to rebuild your credit, utilizing business credit cards and business lines of credit is optimal because it won't show up on your credit reports. It doesn't matter what your balances are. It's not going to hurt your credit scores, and it's not it's going to hurt whatever you're trying to do in your personal life. Okay, let me just say that. All right. When anybody has to check your credit, these don't show up. All right. So these are your debt elimination banking tools. You got the home equity line of credit. That's your gold standard. Cash value life insurance and retirement accounts can work in conjunction with that to help grow your wealth. You can also use them to eliminate some debts, but those are more of your grow your wealth. Okay. These up here at the top, as you see, up there, these credit cards, lines of credit, those are your attack your debt assets. Okay. All right. So thanks for watching. Stay tuned. In the next video, we'll just go over specific scenarios using dynamic banking and attacking some credit card debt, auto loan, mortgages. Let's just see how quickly we can pay those debts down and stuff like that. So be sure to like this video down below if you like the content. And I'll continue pushing out more videos like this, and subscribe to our channel, which is going to help us grow. And we'll see you soon.